Many founders start out running their business affairs through their personal bank account. It feels simpler at first, but as the business grows, that decision can create real problems, including some you might not have thought of. The most obvious issue is visibility. When personal and business funds are commingled in the same account, you lose a clear picture of how the business is doing. It's difficult to track cash flow accurately or tell at a glance if the company is healthy. Separating business funds into dedicated accounts makes it immediately visible where your business finances stand. Tax prep becomes significantly easier too. The IRS recommends that all business owners open a separate account to simplify quarterly tax payments. When everything is in one place, you aren't sorting through months of transactions trying to figure out which coffee was for a client and which was for you. Whether you're handling taxes yourself or working with an accountant, clean and separate records make the whole process faster and less prone to errors. There's also an impact on liability that many people aren't aware of. If you formed an LLC or a corporation, that structure protects your personal assets from business liabilities. But there is a legal concept called piercing the corporate veil. If a court determines you've been mixing finances or using business funds for personal expenses, that legal separation can be voided, putting personal assets like your house, your car, and your savings at risk from creditors. A dedicated business account is the clearest way to demonstrate that the separation is real and that you're running the business as its own distinct entity. Beyond organization, a business account offers features personal accounts don't. Personal accounts often have limits on transaction volume and dollar amounts, which can be a hindrance as your business scales. Business accounts are built for this higher volume. Business accounts also typically allow multi-user access, which means you can give a bookkeeper or accountant their own login with specific permissions, like read-only access. They can download statements or initiate payments without you handing over full control of your finances. As your team grows, that kind of access management is crucial. Having a business account also matters for credit and financing, making it easier to apply for a business credit card and helping you build a business credit history over time. If you apply for a loan or venture debt, lenders will want to see organized financial statements and tax returns. Having a dedicated account means that information is much easier to pull, rather than something you need to sort out first. When considering external optics, investors notice when a company is operating out of a personal account. It signals that the business isn't fully set up yet, and that can create doubt at exactly the wrong moment. A business account is a small change that sends a clear signal to everyone you work with that you're running a real, organized operation. It also speeds things up during fundraising, when you need an account that can receive wires quickly and without friction. If you want to go deeper on what to look for when choosing the right account, the full guide is on the Mercury blog. I've put the link in the description.